Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site, we have Eddie Hertzman, founder and president of Sourcing Journal, to discuss supply chain constraints and costs, when this could all potentially moderate. Of course, we'll get into strategizing around logistics as well. Eddie, it's been a couple of years since we've had you at market site. Welcome back to the show.
Thanks for having me.
All right, let's talk about the current state of supply chain and logistics. And we know that geopolitics has exacerbated it, but I don't feel like we got through the pandemic bottleneck yet either.
Unfortunately, Jill, I think my prognosis is not much different than the last time we spoke. You know, if we look at supply chain headwinds, they're not really slowing down. If we look at raw material, let's just look at raw material, for example. Cotton this week actually hit 140, I think it's 135 today. A year ago it was in the 80s. 2 years ago it was in the 50s. It hasn't been over $1 in over 10 years. So just look at, that's one raw material. So inflation throughout the supply chain is rampant. Capacity is still a big problem. If we talk about, look at what's going on in Shanghai right now. We have a zero tolerance policy out of China. So we're still seeing a lot of bottlenecks. Vietnam opens up and shuts down. So people are concerned about getting their product. If we talk about logistics, yes, maybe there's a little bit of a softening, but we have looming port strikes. I mean, in the best of times, these negotiations with the union are very dicey. So we're anticipating a lot of problems on the West Coast. We have issues coming out of China. I think a lot of people were under the impression that this was going to be a one-time cost last year. Best case scenario, maybe we see 20, 30% off a $25,000 container. It's never going back to 4 or 5. So everyone that took these one-time costs are wrong. This is the new normal, and this is going to be the new cost of doing business. So if people are not planning accordingly, they're going to be fooled. And I don't think we're going to see any real solution around this into maybe 2023.
Right. Well, I mean, it's the supply chain is just massive. It's global. It's not like you can flip a switch or get the latest, SaaS software and all of a sudden logistics are fixed. I mean, I moved a year ago. I still do not have my dining room and living room, and this is over a year already. It's the worst problem to have. That's not a bad thing, but you get my point. And I also think when we think about earnings going forward, we really didn't hear much about this in fourth quarter earnings, but as we get Q1 guidance and so forth, cost is going to come into the conversation. It has to come into the conversation. How do you think it's going to impact the retailers?
I've said this over and over again. I think last year was fool's gold. A lot of retailers had their best year ever because they had lean inventory. They were able to pass through higher prices, which has higher margin. Right now, the cost increases are going to really start to hit, the bottom line. For a lot of retailers that don't have major pricing power, they can't absorb 15, 20% higher costs. And the second issue is, which is I'm hearing from everybody, everyone is buying a lot of inventory because A, they know they're not going to get all of it on time. B, they are concerned, they're trying to comp against last year. So they need this inventory to keep the sales going. So they're doing this in anticipation of a robust consumer appetite leading into the second half. But it's a little bit of a paradox right now. The sales still seem to be okay. But what happens when this inventory hits, consumer appetite goes down, and we have more expensive merchandise that's not selling? It's a recipe for a big, big problem. So I personally believe that there's anywhere from 10 to 20% people are being too bullish on their estimates for this year, and we're going to see a lot of problems come the second half.
So what are companies doing to be more proactive about logistics and not just reactive? Because I happen to be in agreement with you. I don't think it's a one-time thing.
Yep.
I think there's a lot of legacy systems in place that kind of need to catch up with consumer demand and their expectations for same day, next day delivery. Are you hearing anything from companies where they're either revamping their regional supply or they're bringing on newer technologies to navigate this?
So I think the first paradigm shift here is the conversation of logistics is making it into the boardroom. We're having this conversation on logistics. It used to be, I need a pink sweater. Well, now you need a pink sweater in Indiana by Friday, and I need to ship it to you for $30 or you don't want it. This is a whole new situation. What are people doing? Okay, the short answer is people are looking at alternative ports. They're going to Oakland. Maybe they're going to South Carolina. They're trying to mitigate some of the risk over the West Coast. Companies like American Eagle, what they did, I think, is very, very bold. They bought Airterra. They bought Quiet Logistics. They believe, and the gentleman that runs this shaker, he believes supply chain is not a competitive advantage. An efficient supply chain is a competitive advantage. So it's very much like the Amazon effect.
Right.
They want to combine small and mid-tail retailers and give them the purchasing power, because not everyone's a Home Depot or a Walmart or an Amazon that could rent a plane and buy a ship. So you're seeing that. last year, I don't remember the exact number, but there was more money invested in logistics tech, like in the first 3 quarters of last year, than multiple years before. So for the first time, I think people are realizing last mile is critical. This is broken. We don't have enough laborers to even drive the trucks, man the warehouses. So we're a little bit behind right now.
Speaking of labor, of course, it's increased cost as well.
Yes.
I mean, we see what's happening with wages. The other issue, I think, is, and we see it happening in the financial space too, everyone's competing for that same tech and logistical talent, right? So if you think of, Wall Street banks are competing for it, your traditional tech firms are competing for it. Now you have retail competing for it. There's just simply not enough people.
It's not enough people, and I think it's a different skill set that the retail industry didn't always need to have. So now you need data scientists. Well, are we able to recruit from the Stanfords of the world and bring them into the retail industry, or are they romance and they want to go to Silicon Valley and work at a tech startup? I think right now the biggest problem is there's not enough people that are. This is also a hands-on business, right? We need people in an office touching product, traveling overseas. Overseas travel's been restricted. So even when I talk to the factories, they're having trouble getting people. The agencies out of Hong Kong are having trouble getting people. People are leaving Hong Kong. So no matter where you are in the supply chain, you have a hard time getting people. And so I think this is an increased cost. People are going to have to pay more and more. Look what Amazon is going through this past week. Again, this is just another signal that prices are going to go up. The question is what retailers can pass it on, what retailers can't, and when is the consumer going to say, I can't do it? It was a great anecdote that a customer of mine said. He was making dresses for an off-price retailer. At $12.99, they blew out. At $14.99, they blew out. At $16.99, 50% less sales.
Yep. Well, you have demand destruction at some point.
Correct.
I mean, we see it in the housing market.
Yep.
We see it everywhere, and people are just not going to simply buy goods. They'll just turn it into services, travel, vacation, leisure, that sort of thing.
And the customer has to get a little smart now, because what's going to start to happen is the fabric's going to get thinner. You're going to start to see substitution so the quality of the goods start to go down. Then you start to see in other consumer product industries, like you get the bag of potato chips is half filled. So people get crafty, but at some point you can only get so crafty until the ticket price goes up.
All right. Appreciate the insight as always, Eddie. Great to see you at MarketSite, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.